The management of Tata Consumer joins us now. Sunil D'Souza, Managing Director and CEO. Good morning, Sunil. Fantastic to have you back. My first question, before I speak, I want you to smile because this one will definitely bring a smile to your face. And the question is, how does it feel that now that Tata Consumer is part of Nifty 50?
Nikunj, before I answer that question, I would like to give probably the reason why Tata Consumer is now part of Nifty 50 is probably the results that we've delivered so far. We've been about 9 months as Tata Consumer Products. Last quarter, we delivered 23% top line, 29% net profit. And even for the 9 months, if you look at it, it's a perfect flow through. 18% top line, 26% EBITDA, and 47% net profit. So I think this is the value of the share price of Tata Consumer is a recognition of both the investment thesis of the Tata Group when they formed Tata Consumer, as well as the execution that the team has put behind it to deliver that investment thesis. So yes, it feels, I would say, humbled as well as proud to be part of the 50 most traded listed stocks and probably part of what is the world's largest traded contract per se, the Nifty 50. But you know, the flip side is now it puts a greater spotlight on performance and builds greater expectations. The other piece is also then we are subject to an India view. I mean, because a lot of people buy the Nifty 50 instead of individual stocks. So we're part of a larger basket and therefore we will be more susceptible to the ups and downs there. But all in all, I think feel humbled and proud, like I said, to have reached this milestone.
So let's put the spotlight on what is next. And first, let's understand that the new businesses which are become part of Tata Consumer and suddenly the new businesses which you've incubated to take advantage of your reach and distribution, what is the growth there?
Nikunj, we see growth both in the existing portfolio, what we call as the core, which is tea and salt, and the nascent categories that we have of coffee, Sampan, which we have launched, as well as the new inorganic opportunities that we are looking at, or some of which we have already fructified. So let me go step by step. So I start with Sampan. Sampan has delivered a significant double-digit growth over the course of the year, and we are right now fueling the pipeline, and we expect acceleration from here on. All pulses, spices, mixes. Coffee, which we started focusing on about Q1, Q2, has moved sequentially, +2, +26, +31, and that trend continues to accelerate. So feel good about that. That is primarily reach and distribution that we are driving. Apart from that, we've done 2 acquisitions already, right? We've acquired PepsiCo stake in our JV, which we had NourishCo, and we've just finished the acquisition and actually closed the deal in record time of Soulfull. NourishCo, which was almost completely down in the dumps when the full lockdown happened, has gone from strength to strength. Last quarter, we delivered a top line of 9%. December we exited at a 40, and we continued that run rate, 30 to 40% growth, and we've not even started. We were playing in 25% of the country. Geographic expansion is just about beginning up, but just the sheer focus and the might of distribution behind Tata Gluco Plus, Water Plus, Himalayan, I think is delivering great results. Then I come to Soulfull. Soulfull is something which we have just started on, and we see huge opportunity for Soulfull going forward. Why? It gets us into new consumption occasions, breakfast, snacking, which we did not have in our portfolio. But apart from that, it also gets us into new categories, snacking, mini meals, breakfast, cereals, etc. All those, about a 20,000 crore market growing at about a 15%. Margin accretive, great team, great new product. And you know what? Exactly what you said. There are 15,000 outlets. My total reach is now about 2.4 million. So I can really explode the whole portfolio as we expand distribution. But more than that, there are also synergies to be had at the back end in procurement, manufacturing, logistics. So all in all, pieces falling into place in line with the 6 strategic pillars that we had outlined: growth in core, digital and innovation, building future-ready organization, organic, inorganic opportunities, synergies, and growing sustainably.
Mr. D'Souza, one of the mainstay for Tata Consumer X Tata Tea has been the tea business, and then we've seen tea prices in a sense for a tea packaging company like yours have been not on the right side. How are you planning to deal with this spike in raw material pricing? Because everything has gone up, from tea prices to coffee prices, from sugar prices to other basic ingredients. So while you are on a cusp of growth and innovation and reinvention, you have to deal with something very basic, which is commodity prices, commodity inflation.
You're absolutely right, Nikunj. Now, if I segregate my business, there are three big parts, right? One is India beverages, India foods, and the international business. India foods chugging along, I think huge growth opportunity in salt on share, and the Sampan portfolio chugging along, doing very well, both top line, bottom line. International, we're seeing good growth, expansion of portfolio, and Kenya has had record crops. So there it's the reverse of the commodities. Commodities going soft and profitability very, very healthy. Now I come to India beverages. India beverages is primarily tea. Coffee is a very nascent category, so not so much impact on our P&L, not today. But then tea has been through a very, very, I would say, once in a lifetime sort of yo-yo on pricing with the lockdown, shortage, about 15% gap between demand and supply, and therefore tea prices went up to about 70-80% in September. Right now, they're range bound in about 25 to 30%. So we are where we are. Now, we have been able to take some pricing, but not all of it. So there is a bit of squeeze on the margin. But here's the thing. We are not in this game only for today, not for a quarter, not for 2 quarters. We are here in for the long haul. And we do believe as the next round of crops, which is just about starting off, as they come in, tea prices will normalize, will come back to normal. Now, on the tea business, I would say right now we are focusing on doing a fine balance between margin, market share, volume growth, and profitability. And we're focusing on things we can control. So just as a perspective, we had said we'll expand distribution. My numeric reach from April to now is up by 20%. I reach about 2.4 million outlets. I bill 65% more outlets on a 3-monthly basis. 80% of them are buying on a monthly basis. I'm the volume share leader now in January. My value share is at a 24-month high. My share in the same outlet vis-a-vis my largest competitor is just 1% short. So, and closing in. So all in all, we feel good about the building blocks that we are putting in place. Yes, tea prices do create a pressure on the margin for some time, but it's a fine balance to walk.
How much of your portfolio you would say is enjoying benefits of pricing power, which is that whatever happens to the commodity prices, you'll always keep on passing prices and the consumer will be happy to accept it? And how much of your portfolio you would say is still more like a volatile portfolio and your pricing power and your margins keeps on fluctuating on what happens to raw material?
So Nikunj, if I take a very broad guess, it's about 2/3 of my portfolio is, or about 60 to 65% of my portfolio is more of a branded play, and about 30-35%, 40% is about commoditized. And therein lies the game. I mean, we're trying to do 2 things. One is in our core categories, tea and salt itself, we are trying to create power brands, and therefore you'll see innovation and A&P being ramped up to make sure that we build stronger product and stronger brands, and therefore pricing power in that portfolio. Apart from that, both the organic and inorganic growth drivers, the things that we're looking at is to get us to a more margin accretive, more non-commoditized, more branded, more distribution-led portfolio, if you may.
Okay. Your P multiples right now are getting compared with that of Nestle, Britannia, and HUL. And that's what markets are saying, that why should Tata Consumer, which is a consumer company now, trade at such a discount? That's a fair argument. But your return ratios are nowhere close to what those companies have generated, both in terms of ROS and also in terms of return on equity. Do you have ambition to really reach, if not the best, maybe in the top quartile in terms of return ratios? And how soon do you think we will be able to compare our return ratios with other FMCG majors?
So Nikunj, you're absolutely right. When you look at Tata Consumer, and this is legacy which we have, is we're sitting a lot of goodwill on our balance sheet, and therefore, when you look at ROE or ROC metrics, we're lagging the rest of the industry. But it is what it is. Also, I would say when shareholders are investing in a company, they're investing for the future and not for the past. So the critical piece is to now move those ROE, ROC matrices northwards. So I would say growth is the single biggest driver for us, and optimization of working capital, cash, to make sure all the return ratios move in the right direction. Believe me, the team is extremely focused on doing this, and you would see us focused on moving all the return ratios north.
Could you give a sense, not in terms of a number, but in terms of progress, how gradual, how smooth, how quickly it could happen?
So I'll give you what has actually happened, right? Without goodwill, if you look at it just year to date, we have moved up our ROC by about 6 percentage points. So already on the move. I think you will see acceleration on that, both as we trim down our costs and our infrastructure and make sure we are a lean, mean machine. That's number one. And number two, as we build the funnel for S&D and manufacturing logistics, and we throughput more and more products, both organically and inorganically through that. 23% top line growth. We aim to continue at significantly good double-digit growth levels as we go forward. That should have a significant impact on the return metrics.
One side, you're expanding your distribution, which is the numbers you've already shared with us, something which markets are aware of. And it is just a coincidence that Tata Sons has gone and acquired Big Basket, which is an online grocery portal. How do these things complement each other? And how will you fit in your strategy?
I would talk about Tata Consumer, and I would not comment on things which Tata Sons is doing. So Nikunj, there is a very, very specific space for e-commerce. There is a specific space for modern trade, institutional business, and a general trade business. And we are focused on building all the four verticals off. We've created very clear demarcations. And we've gone and made sure not only the organization structure, even the talent therein is fully tuned. So we've actually gone out and recruited people to run modern trade, e-commerce, etc., because those are specialized functions. Now, e-commerce per se, just to comment on it, we moved our needle from about 2.5% of sales to about 5.5%, 6% right now. And I do think double digit is within an arm's reach, if I may. So fully focused on that. As and when the group plays across and builds more heft and muscle in those spaces, we will definitely be playing in that space and taking full advantage of the group play.
You're a market leader in the tea category. Which are the other product categories where you think you really want to be either number one or number two? If you don't become number one or number two, you will not be in that business. So can you walk us through that? Which are the categories in which you think you are looking at scaling up dramatically? And which are the categories you would say, look, it does not make sense for me. I'm looking at sales, size and growth. It is better to exit them.
Nikunj, I would answer that in 2 or 3 different pieces. Number one is we are market leaders in, we are the top 2 in tea. We are market leaders by far in salt. And in both these categories, tea, I do see growth, both market share and absolute industry growth per se. And therefore, that is a good business to be in. Salt, we've got a 30+ share. We see opportunities both on the premium end as well as the mass end, and you'll see actions in both these places. Salt, in fact, we've seen double-digit growth. Value-added salt last quarter, we grew about 170%. So both these categories. Apart from that, we are the probably the one of the prominent national brands in pulses, and pulses is a huge market. So you'll see us ramping up our space there. Mixes, we've just about stepped in. We do see the Tata Sampann brand name, the product quality that we have, and the brands that we can create, ability to ramp up there significantly. The Nourishco business, I would say, growth rates very, very significant, and we aim to be in the top 2, top 3 sort of players in the categories which we play. Tata Gluco Plus, for example, doesn't have competition. It's a affordable, refreshing drink, and it is fantastic to have when you've just got 10 rupees in your pocket. And by the way, we've got a huge innovation pipeline out there. Soulful, again, we see this magic of ancient grains tailored to Indian consumers as being able to create magic. So I would not look at a product per se, I would look at a portfolio piece. So whether it is Soulful, whether it is Nourishco, whether it is the Sampan range that we are playing in, we are playing to win. Nikunj, absolutely right. If you're not in the top rung, then you're also ran. You would struggle both in terms of distribution, pricing, profitability, etc. And there we will take a close look at what we need to do going forward. But as of now, I think everything is on the right footing.
Have you internally debated that if you want to exit your US operations, because obviously the growth, the market dynamics, the power of Tata brand, your distribution, everything is far better in India. On a medium-term basis, have you internally debated that do you want to be in the US business at all?
So Nikunj, we look at our portfolio both from a product as well as geography on a constant basis. So in the past, we've exited Russia, China, Czech. We've just about last quarter, we've exited the out-of-home coffee business in Australia. So if we don't see space for a business, we wouldn't be gun shy and we would exit, and we've demonstrated that. Now, the international business per se, right now we're doubling down on 3 core geographies, UK, US, and Canada. And we feel good about it. In fact, last quarter, the international business, yes, it's a slower growth business, but it's profitable and it is hugely cash positive. 4% top line, 48% bottom line. I think that would be bring a cheer to anyone when they look at the bottom lines. But that said, it's a constant cycle that we do. If we find something that doesn't fit in our portfolio or is a drag on our entire algorithm, we would not be scared to cut it shy. But we are not there as of now. In fact, I'll just give you the UK example, for example. We are strong in black tea, but the growth is happening in fruit and herbal specialty and in the premium end. We've just formed a 3-brand strategy. We've launched Good Earth from the US into an exclusive arrangement in Sainsbury's and got off to a great start. We'll now be expanding it. Tea Pigs, which was a standalone business, we're now integrating it to drive distribution as a whole. So we do see us starting to make a tangible difference in the tea category. Similarly, we look at different markets and make sure that we have the right strategy. It's delivering what it's supposed to deliver within our portfolio play. And if it doesn't, we will not be shy to take tough decisions.
In your tenure as the new CEO of Managing Director of Tata Consumer, one side you've exited and one side you've also made acquisitions. Which are the gaps you would like to fill?
So Nikunj, so let me first say India is a growth story, significant growth story. International is a growth, but more of a profit story right now. In India is where you will see larger action per se. We are supposed to become a total FMCG company, but I would say one step at a time. We've got enough space in the F&B space, and right now we're looking at adjacencies. F&B in India is what? A $400 billion business. There are at least 30 categories which are 5,000 crore plus. We've done this segmentation. We've looked at the entire play in terms of segment size, growth rates, margins, competitive intensity. What does the Tata name bring to bear? What are the capabilities that we can play out there? And we've formed a very specific set of platforms which we will build out in India. And to build out those platforms, we'll use both organic as well as inorganic spaces. So, for example, the reason why we went and did Soulful, because we saw this whole space of breakfast, snacking, mini meals as a white space for us, as a company, extremely profitable, margin accretive, our ability to leverage our distribution, innovation capabilities and drive value there. But organically, it would have taken time. And so Soulful was a great brand to plug on. We will quickly integrate it, and now you'll see that pace scaling up. So you'll probably see this playbook being repeated again and again to make sure we're covering the white spaces that we can. But again, adjacencies first and then a larger FMCG play.
One area where you've exited, and this Tata Consumer, or I would say Tata Tea, also has exited this couple of years ago when you exited your plantation business, when you exited a lot of your other businesses. Would you be looking at doing such exits even in Tata Coffee now?
Tata Coffee right now is a subsidiary for us. It's a profitable business. Tata Coffee has two pieces, plantations and extractions. Extractions is the big driver right now, Nikunj. As of now, we feel good about where Tata Coffee is headed, especially in the extraction space. So right now, it is what it is. But like I said, we will constantly evaluate all options, make sure that we've got the right portfolio in terms of businesses to make sure we're delivering value to shareholders in terms of what the investments are.
When Chandra took over as chairman of Tata Sons, he came with a clear defined policy of simplifying the structure and getting rid of non-core businesses. And I think it's evident the way how Tata Consumer has redefined itself in terms of ownership and in terms of product profiling. Can I say a lot of the reorganization, a lot of the reevaluation of the brands and the portfolio and the strategic parts are over? What I'm trying to understand, perhaps, sir, is last 12-18 months, Tata Consumer has taken a rebirth. Lot of changes and alignment has happened. Is there more coming, or that is now almost done?
So Nikunj, let me again break it into two parts. The single biggest thing was integrating the food and beverage business. I think there the heavy lifting is almost done. There are some small pieces of expanding rural distribution, etc., which are out there. And now it is focusing on innovation, driving distribution, powering up the brands with A&P, etc. So that's one piece. The second piece is this whole simplify, synergize, and scale piece. I think we are on a journey. We have not reached the end of it by a long stretch of imagination. So it's a journey, and you'll see all the pieces playing out in the mid to longer term.
A year from now, if you are recording the same show, India Revival Mission, what kind of headlines we think we should be staring at from Tata Consumer? High growth, high return. What do you think would be the narrative of the conversation?
Narrative of the conversation is that Tata Consumer Products is focused very, very clearly on 6 pillars: growing your core, becoming a digital first and innovative company, growing both organically and inorganically, very, very, very strong focus on costs, working capital, inventories, cash, making sure you've got the right talent for the future, and of course, being a good corporate citizen, part of the Tata Group, doing good to societies that we operate in. Tata Consumer Products very, very clearly focused on market share in categories that they operate, to your point, being in the top 2, top 3 players in every category, driving share, driving top line, good flow through, bottom line, creating shareholder value.
Just one more question. I'm just trying to perhaps talk about a concern which a lot of shareholders have had in the past, and you're aware of it, the famous detergent war which happened between HUL and P&G. There are a lot of similar price wars which have happened in the oil market. There are a lot of similar price war where ITC and others have initiated in other food categories. Do you fear that there could be price war in categories, and in a price war the consumers make money, but the market share blindness becomes so high that companies don't make money? Do you fear that happening?
So Nikunj, I could not discount that happening, but I cannot spend sleepless nights on what could happen. I think the critical piece for us at Tata Consumer is focusing on what we control and what we can do today, which is to build a really strong competitive moat, strong distribution, strong innovation pipeline, strong brands, ability to price, connect with the consumer, and making sure we're building strong businesses. Competition is a reality. It dials up and down. Not that I could forecast it, but I need to make sure that my business is on a strong footing. So as and when we are faced with competition, we're able to tackle it and move on with business.
That was fantastic. You've been very vocal. We've discussed a whole host of topics, and we started with a smile. Let's end with a smile. It's a pleasure when I say this. Tata Consumer is now part of Nifty 50.
Thank you. Thanks, Nikunj.